You're scrolling real estate listings at midnight. Every house that isn't about to collapse costs $500,000. The kitchen has laminate countertops from 2003. The carpet is beige. There's fake wood paneling in the basement. And somehow, the listing agent calls it a starter home. Meanwhile, you're doing mental math on your salary, thinking, did I miss a massive promotion? Or did the housing market completely lose its mind? Here's the spoiler. It's not you. It's the math. And the math is brutal. My name is Shozib. This is Shozib Invests. And today we're going to calculate who can actually afford a $500,000 house in 2026. Not who the bank approves. Not who technically qualifies. But who can buy it, live in it, and still sleep at night without turning their life into a financial stress simulator. Because qualifying for a mortgage and affording a home are two very different things. The uncomfortable reality. In dozens of U.S. markets right now, $500,000 is the baseline. That's not luxury. That's not a mansion. That's a 1,200 square foot box with 3 bedrooms, 2 bathrooms, a yard the size of a beach towel in places like Denver, Austin, or anywhere near a major metro. $500,000 is what normal people are expected to pay for normal houses. Now here's the problem. The median household income in America is about $84,000, which means we're asking people making $84,000 a year to buy homes that cost 6 times their income. If that sounds insane to you, congratulations, you're paying attention. But everyone keeps saying it's fine. The mortgage broker says you're approved. Your parents bought a house on way less. Some influencer on TikTok is buying houses with no money down. So what's the problem? Everyone is lying to you about what affordable actually means. The down payment reality. The old rule was simple. 20% down. On a $500,000 house, that's $100,000 cash. Let me say that again. $100,000. The median American savings account has around $8,000. So you're not a little short. You're $92,000 short. And before you say, I'll just save for it, let's do that math. If you make $84,000 and save 10% of your gross income, which almost nobody does, that's $8,400 a year. At that pace, it takes 12 years to save the down payment. And that assumes home prices don't rise, rent doesn't increase, life doesn't happen, which we all know is fantasy. Low down payment equals PMI. Most buyers don't put 20% down. They put 5% or 10%. So let's say you manage 10% or $50,000. Now you unlock a new monthly charge, PMI, private mortgage insurance. This usually costs $200 to $400 per month. And here's the fun part. It protects the bank, not you. You're paying extra every month because the lender doesn't trust you yet. You start homeownership already behind. The mortgage payment, after your $50,000 down payment, you're left with a $450,000 loan. At today's interest rates, around 6-7%. Your mortgage payment is about. Back-end index pointing right, $2,750 to $2,850 per month. That's just principal and interest. We haven't added real life yet. The costs nobody talks about. Let's add the rest. Property taxes is almost equal to $500 per month. Homeowners insurance, higher than ever, is almost equal to $250 to $350 per month. Maintenance, rule of thumb, is 1% of home value per year. That's $5,000 annually, is almost equal to $417 per month. PMI, another $200 to $400 per month. The real monthly cost. Let's add it up. Mortgage, $2,850. Taxes, $500. Insurance, $300. Maintenance, $417. PMI, $300. Back-end index pointing right total, $4,367 per month. And that's assuming nothing breaks. No HOA surprises. No roof replacement. No HVAC failure. Just perfect imaginary homeownership. So how much income do you need? Financial advisors say housing should be no more than 28% of gross income. Banks approve you up to 43% because they don't care if you're stressed. Let's reverse it. If $4,367 is 28% of your income, back-end index pointing right, you need about $187,000 per year. Even using the bank's loose rule, back-end index pointing right, you still need around $150,000 annually. Here's the punchline. Only 10 to 20% of U.S. households make $150,000 or more, which means most Americans cannot comfortably afford a $500,000 house. This isn't opinion. This is math being rude. But people are still buying. Who? 3 groups. Dual income high earners. Family money or big down payments. People stretching so thin one emergency ruins everything. Let's look at group 3. A $160,000 household example. 2 professionals earning $160,000 combined. Upper middle class. Above average. Doing everything right. After taxes and deductions. They take home about $9,500 per month. Subtract housing, $4,367. They're left with $5,133. Now real life. Car payments, $800. Car insurance, $250. Gas, $300. Student loans, $600. Health insurance, $400. Groceries, $800. Utilities plus phones plus internet, $450. Back-end index pointing right, $1,533 left. That's 4. Kids, medical bills, repairs, savings, a life. They're spending 46% of take-home pay on housing. That's not wealth. That's stress with drywall. What house poor feels like. It feels like checking your bank account before groceries, saying no to school trips, lying awake at 2 a.m. doing car repair math. HVAC dies, credit card, car accident, credit card, braces, financing dental work. And this is at $160,000 income. At $120,000, $100,000, $84,000. A $500,000 house isn't tight. It's financial fantasy. The system doesn't care. Sellers want high prices. Banks want loans. Agents want commissions. Nobody gets paid to tell you. This will ruin your financial life. So we normalize the misery. House poor. That's adulthood. Can't afford furniture? You're building equity. Stressed all the time? That's normal. No, that's a broken system pretending it works. The truth, for 70 to 80% of households, a $500,000 home is not affordable, not safely, not sustainably. This isn't laziness. Home prices are up 400% since 1990. Income is up 180%. You can't budget your way out of that. What you could do instead, you can rent and invest the difference. Buy cheaper. Wait. Move. Say no. There's no trophy for being house poor. Real wealth is margin. Real wealth is peace. Real wealth is sleeping at night. Final reality check. If you're looking at a $500,000 house and your household income is under $140,000, stop. Ignore approval letters. Ignore pressure. Look at what you can actually afford. Sometimes the smartest move is realizing the game is rigged and choosing not to play. This is Shozib Invests. And this is the math no one wants to do.